Hello and welcome to this special episode of Your Business, Your Wealth, which is what opportunities exist in a coronavirus economy. My name is Paul Adams, President and CEO of Sound Financial Group, joined by the ever cheerful, intelligent, smart, wise, and humble Cory Shepard. I'm so glad you could be with us, as always, for these crucial updates for our clients.
I'm excited about this too, because we do hear a lot of negativity from the media right now, and there's some things to be concerned about, but there are opportunities, silver linings abide, and that's what we're going to take a look at here.
Very good. So we're just going to give you some of the top tips that you might be able to execute today, this year, in this down economy to help you be more resilient for the bounce back. You want to hit the first one, Cory?
Yeah, very simple one is IRA conversion to Roth. If you've been thinking about moving money from that tax deferred to tax-free account in a Roth, well, you just got a discount on moving all those shares because they cost a little bit less than they did yesterday. So that's one great opportunity to move more shares in less time. Second one is inside of your 401k.
Well, I was just going to say, Cory, sorry, is the easy math on that? If your portfolio was 100,000, it might today be 70,000. We could look at that as a bad thing, but that's also the new value they will assess when it moves from IRA to Roth. So when the economy comes back, as you guys can see from past crashes in our past coronavirus videos, you're going to notice the market comes back really quickly after these big market crashes.
Same applies to a traditional 401k in-plan conversion to Roth if your provider allows for that. So this is a great time to find out if you have a Roth option in your 401k, if you didn't already know that. Paul, another one is estate planning considerations.
Indeed. So
what do you think folks are looking at there?
Well, simply put, you can shift 11.58 million. As somebody who has wealth, you can shift that to the next generation with no taxes. It's the unified credit or the estate tax exclusion. Now you get that per spouse. But for higher net worth estates, we might want to push some through either the gifting corridor, annual gifting corridor, or the exclusion amount. And you might be able to do so with lower market values, both due to lack of marketability, fair market value decrease, the fact that you may have a minority interest in a particular enterprise and therefore it has lower value. The estate tax attorneys tend to work on that deeply as to how much discounting can be done. But the fair market value discount in this economy, say on a commercial building, might be a great time to shift that across to the other side of the outside of your taxable estate.
And of course, the market has already made you more conservative than you were otherwise as this decline has happened, meaning your stocks shrank a lot faster than your bonds. So you have a greater proportion of bonds than stocks. So this is a great time to rebalance if you haven't done so already, because again, you're doing it at a discount on moving those shares.
That's right. And a simple rebalance for like a client of ours that just has a couple of $1 million was going to shift over 150,000 of his fixed income into equities at these new lower prices so that they get a chance to ride that back up and allow the rebalancing to work in their favor. Now, Cory, you had brought up about a bunch of these business loans and the ability with the business loans as they exist now, lower terms, very favorable repayment conditions, that some of these government loans might be a great opportunity for some people to get lower debt, lower cost financing that could replace some of their existing financing potentially, or give them the opportunity to retool their business in the light of how the economy is working now so that they have the opportunity to expand and take territory in their markets during this downturn that may not have been available before the downturn.
Yeah, and it's not just it was designed for folks who maybe need some filling in the gap of their business revenue. And that's definitely a huge use for the program, but expanding our economy in the areas that are really in demand right now is also a great help for everybody. And then of course, the classic one is if you do have cash on the sidelines that you don't need over the short term, then it's as good a time as any to add that to the market at a discount as well. But you do need to make sure you're not just doing it because there's a discount. Like, check all the other factors of your life to make sure that you can afford to have this cash out there and play for a while and not have access to it.
And one last point on that is that some of you are listening and there is a lot of stress and a lot of concern and what's going to happen with the economy. But I was speaking to a physician just the other day, who of course has a lot of people in his ear about the market's down and what should I do and maybe I should exit the market. And one of the things I brought up to him was, you have no threat to your occupation. There's not a physician in this country that's going to be fired, I don't think, during the COVID crisis. So you have the ability to just control your household expenses and literally put yourself in a position that you have no need for any of your investment money for years and years and years. And thinking about what's the economy going to be like in 5 years, not today. For some of you, you're in that eye of the storm occupation where you can see all the devastation and damage being done around you, but in your occupation or in your business now might be, like it or not, a great time. If you're in one of those occupations, keep that in mind as you see the devastation elsewhere. It doesn't mean it's happening to you or your portfolio, and might be a great time for you to make consistent investment decisions into this down market. So with that, that's our quick COVID-19 update for this week. What we hope you can do is, if you don't have an advisor that feels like they're returning your calls or helping you strategize like this for your future, simply use the scheduling link in the description of this video. You can get a hold of Cory, and Cory's more than happy to take the time for anybody that watches our videos or has been a consistent podcast listener. We want to help you. And we'll do that with a 15-minute free call. We've already budgeted time in our staff to be able to offer our portfolio review. We previously would charge $500 for each, to be able to offer that for free to friends of the show, so that you get the opportunity to make sure you're positioned well for when the economy comes raging back, even if you're not a client of ours. So with that, we hope, as always, that this episode has been a contribution to you being able to design and build a good life. Hey everyone, hope you enjoyed watching that video, tuning in. We love having you guys here. Don't forget to like that video, subscribe, and hit the alert bell. But by the way, if you just have questions and you want to dig in and learn a little more, go ahead and email us at info@sfgwa.com. Put yourself in the position to have a 15-minute phone call. I mean, come on. Can your current plans withstand a second opinion? If not, that might be the very reason to reach out.